Hello everyone, and thank you for watching this weekly technical outlook video for the week starting January 22nd. I'm Cristina Bartanido, investment analyst, and at this video I'll share my view on three important FX pairs, euro dollar, dollar yen, and dollar loonie. We have three central bank meetings in the Eurozone, in Japan and in Canada this week, and a couple of important business PMI figures in the Eurozone and the US, while the US will also report its GDP growth figures for the fourth quarter. All these three pairs might be important to watch throughout the week. And starting first with euro dollar and the ECB policy meeting, expectations are for interest rates to remain steady, but what everyone wants to know is whether there will be any rate cuts as soon as in April. So if the central bank plays down that case and instead maintains a hawkish tone, especially if the flash business PMI figures come higher than expected as well for January, then we might see euro dollar crossing above the 50-day moving average, which is currently acting as a resistance slightly above the 1.09 round level. If we surpass that bar, then the next barrier could come around the 20-day moving average at 1.0960, while investors might pay more attention to may pay more attention to this market if the price manages to rally above the 1.1040 level, which is where this tentative descending trend line coming from May 2021 is located. Such a move would improve the outlook and put confidence back to this uptrend. So, technically now the risk is still skewed to the downside. The RSI is below 50. The MACD has just entered the negative region and is falling below its red signal line. So if the price pulls below the 1.09 level, the 200-day moving average, which acted as strong support last week, might provide some footing around the 1.0840 territory. If the decline continues from here, then all the attention will turn to December's floor of 1.0725 and 1.0755. Now turning to dollar yen in the Bank of Japan's policy meeting, expectations are for interest rates to remain steady there as well, especially after the damage from the earthquake and the downturn in inflation. There is a less, the odds for a rate hike have declined in Japan, but we shouldn't forget that the Bank of Japan's governor has been more hawkish back in December. So given the fact that the Bank of Japan is quite unpredictable, I would rule out any hawkish shifts in this meeting. If, we also have a couple of US data, including the flash PMI figures, as well as the GDP growth figures for the fourth quarter, which are expected to slow down. So if the Bank of Japan decides to keep policy steady and the US data surprise to the upside, that could still help dollar yen to continue higher. And in this case, all the attention will be on the 150 level. This is a territory which the Bank of Japan is probably looking closely. It's usually uses some intervention when the pair trades around or higher than this level. So that could be that area will be in focus in the coming sessions. A break above that territory could drive us up to the 2022 551.93. While above that, the next resistance could occur around the 153.35 barrier. From a technical perspective, there is risk for a downside correction here as well. You can see that the RSI has reached its previous peaks and it's not far below its 70 overbought level. The stochastic oscillator has already turned to the downside in the overbought region as well, above 80. So there is potential for a downside move, especially if we break below the 147 number where this ascending trend line is located. Then the 50-day moving average could come next to view at 146. This coincides with the 50% Fibonacci retracement of this downfall over here. Then additional declines from here could see a test of the 20 and 200-day moving averages somewhere between the 144 and 144.70 territory. And finally, looking at dollar loonie and the Bank of Canada's policy announcement. Well, that policy meeting might attract special attention because the central bank will also announce will update its economic projections and will provide and will hold a press conference. Inflation in Canada is closer to the central bank's 1 to 3% range target, and the core inflation is within this range at 2.6%. So the Bank of Canada might be more confident to cut interest rates, but overall, there are still some persisting price increases in the housing sector, as well as some upside wage pressures. So that could deter the central bank from announcing any support for a rate cut as soon as this week. Looking at the pair now from a technical perspective, we don't have strong bullish signals. The RSI is around its 50 neutral mark. It weakened there. It has weakened to that point. The stochastic oscillator is already trending lower. So the bias is not clear on the bullish side, especially after the drop below this support line from November 2023, which is acting as resistance again at 1.3450. If that proves a tough resistance, then the pair could weaken towards its 20-day moving average at 1.3360. While lower than that, I expect the price to stabilize somewhere between the 1.3285 low from January 5th and the 1.3245 number, where this ascending trend line from the 2021 low is placed. Now, what could improve the outlook for this market? Well, I would like first to see a decisive, a close above the 1.3450 number, and then above the 50 and 200-day moving averages at 1.35. However, the focus will also be on this descending trend line, which blocked upside movements at the start of November. That is currently around the 50% Fibonacci retracement of this downfall at 1.3537. So I would like to see a clear move above that territory before I target the next barrier, which could be the 61.8% Fibonacci of 1.3622. So that's all for this week's key events and FX pairs. Thank you for watching and see you next time. Bye-bye.